The AI stock bubble. Are we repeating history? Picture this. It's 2025, and a company that makes computer chips is worth more than the entire German economy. Another company that's burning billions in losses is valued at over $150 billion, and investors are throwing money at anything with AI in the name, even if it's just a glorified chatbot. Sound familiar? If you were around in 1999, you're probably getting serious déjà vu right now. Here's what's wild. Nvidia's stock has gone up over 3,500% in the last 5 years. Companies are spending hundreds of billions on AI infrastructure, and venture capitalists are funding anything that mentions artificial intelligence in the pitch deck. But here's the question everyone's afraid to ask. Are we living through the biggest bubble since the dot-com crash? And when it pops, who's going down with it? What's up, everyone? Today we're diving into one of the scariest financial questions right now. Is artificial intelligence the real deal, or are we watching 1999 all over again? We'll compare today's AI mania to the dot-com bubble, break down whether these insane valuations make sense, and figure out who's getting rich and who's about to lose everything. Smash that like button if you want to know the difference between revolution and disaster. Let me tell you a story. In 1998, Pets.com launched with a simple idea: sell pet food online. They burned millions on a Super Bowl ad with a sock puppet. Stock went public at $11, hit $14, and 9 months later, completely bankrupt, dead, gone. But the concept wasn't wrong. Today, Chewy does exactly what Pets.com tried to do, and they're worth $36 billion. The idea was brilliant. The timing and valuation were catastrophically wrong. Now it's 2025. A random company announces AI-powered inventory management. Stock jumps 20% in a day. Another adds AI to their product name. Market cap increases billions overnight. This is literally the dot-com playbook, word for word. This is lesson number 1. Revolutionary technology and insane valuations can both be true at the same time. Let's talk 1999, because history is screaming at us right now. The internet was going to change everything, and it did. But investors completely lost their minds. Companies with zero profit were worth billions. The magic metric was eyeballs, website visitors. Didn't matter if they bought anything. Just having traffic justified billion-dollar valuations. The Nasdaq went from 1,000 points in 1995 to over 5,000 in March 2000. Then crashed 78% over 2 years. Trillions evaporated. Retirement accounts destroyed. Too big to fail. Companies literally failed. Price-to-earnings ratios hit 200. You were paying $200 for every $1 of profit. Healthy PE ratios are 15 to 25. It was complete madness. Ready for the scary part? Let's look at today. Nvidia, the $3.5 trillion elephant in the room. In 2019, they were worth $100 billion. Today, over $3.5 trillion. More valuable than most countries' entire economies. They make the chips that power AI, and they've got a near monopoly. Their revenue exploded. $27 billion in 2023 to over $100 billion projected for 2025. That's real money, real growth. But their PE ratio has been dancing between 40 and 70. That's pricing in the assumption they'll dominate forever, and growth never slows. Here's the brutal truth. Monopolies don't last. IBM dominated mainframes until they didn't. Cisco dominated networking during the dot-com boom, briefly the most valuable company on earth, then crashed 86% and never recovered. This is lesson number 2. Today's champion is tomorrow's cautionary tale. OpenAI is where things get absolutely wild. They're now valued at over $150 billion in private markets, and they're losing billions. Billions. The computing costs to train these models are insane, but investors are pouring money in anyway because everyone believes AI is bigger than the internet, bigger than smartphones, bigger than everything. Microsoft alone has invested over $13 billion. Why? Pure faith that this changes the world. Compare this to Pets.com at $300 million thinking they'd revolutionize pet ownership. The difference? Maybe there isn't one, or maybe AI actually is the real deal. That's what's terrifying. Nobody knows yet. ARM Holdings. They design smartphone chips. When they went public in 2023, they were worth $54 billion. Within a year, that more than doubled their business, barely changed. But now they're an AI play, so investors pay double, just like that. The parallels are uncomfortable. In 1999, average tech PE ratios hit 200. Today, AI stocks trade at 40 to 100. Not quite as crazy, but definitely bubble territory. During .com, companies doubled their stock price by adding .com to their name. A bowling alley became bowlmore.com and jumped 25% overnight. 2025, same game with AI. A beverage company rebranded as an AI firm, stock up 500%. A blockchain company pivoted to AI, shares tripled, identical playbook. Venture capital tells the story. 1999 to 2000, VCs invested $105 billion right before the crash. 2024 to 2025, AI startups have raised over $150 billion, with companies hitting billion-dollar valuations before they even have products. This is lesson number 3. When everyone's getting rich, that's when you should be terrified. But here's the twist. AI is actually working. Unlike .com vaporware, AI is changing the world right now. It's writing code, diagnosing diseases, generating art, automating jobs. ChatGPT hit 100 million users, faster than any product in history. Microsoft, Google, Adobe, billions of people use AI daily now. The infrastructure investments are massive but real. Microsoft, Google, Amazon are spending over $300 billion combined on data centers and AI infrastructure in 2025. That's real capital into real assets. Healthcare AI detects cancer earlier than doctors. Manufacturing AI optimizes supply chains. Financial AI catches fraud in real time. So maybe this isn't a bubble. Maybe we're at the beginning of the biggest revolution since electricity. Or maybe we're in 1999, telling ourselves, this time is different. Here's what people miss. Bubbles don't mean fake technology. The internet was real. The .com bubble was also real. Both happened. Amazon lost 95% of its value in the crash. Today, it's worth trillions. If you bought Amazon at the 2000 peak and held on, you'd be up 100 times, but you'd have survived a 95% loss first. Most humans can't do that psychologically. History's lesson is brutal. The technology probably changes everything. Most companies betting on it will die. A tiny handful become the Amazons of the AI era, and investors lose trillions figuring out which is which. Even if AI is as big as the internet, that doesn't mean today's prices make sense. The internet changed everything, but most 1999 internet companies are dead. This is lesson number 4. Being right about technology doesn't mean you'll make money. Warning signs to watch right now. Revenue versus valuation growth. Stock prices tripling while revenue grows 20%. Red flag. We're seeing this everywhere in AI. Profitability timelines. Companies keep pushing back when they'll make actual profit. Sound familiar? Every .com said profitable in 5 years too. Competition intensifies. Open source AI models improve monthly. Google, Microsoft, Amazon, Meta are in an all-out war. When companies say no competition, run. Capital requirements exploding. Training AI costs billions and keeps rising. If costs grow faster than value created, the math breaks. Regulation incoming. Governments are waking up to AI. Hard regulation could destroy business models overnight. So what do? If you're in tech stocks, understand what you own. Real revenue, path to profit, or just hoping someone pays more than you did. If you've got FOMO and want to jump in, remember, Most people who bought at dot-com peak waited 15 years to break even. Some never did. But avoiding AI completely because it's all hype? You might miss the next Microsoft or Apple. The smartest play is the boring one. Dollar cost average into index funds, keep cash for the crash, and don't get swept up in the mania. My take, we're in a bubble, but it's not 1999. The technology is more real, business models more sound, infrastructure more rational, but valuations are still nuts. Speculation is out of control, and a lot of people will lose fortunes. I think we'll see a correction, maybe not 80% like 2000, but significant enough to wipe out weak players and reset valuations. Companies with real products, customers, and revenue survive and thrive. Hype riders disappear. The AI revolution is real. The AI bubble is also real. The scariest part? We won't know who the real winners are until after it pops. This happened with the internet, with railroads in the 1840s, with automobiles in the 1920s. Every transformative technology creates a bubble. Every bubble sorts winners from pretenders the hard way. So there it is, the uncomfortable truth about AI valuations and dot-com deja vu. The next few years will be absolutely wild, and the investors who stay rational while everyone else loses their minds are the ones who'll win. What do you think? Bubble or revolution? Will Nvidia dominate in 5 years or become the next Cisco? Drop your thoughts below. I read everyone. If this reality check hit different, smash that subscribe button because we're diving deep into the forces reshaping money and power. See you in the next one.